given how lurid the horror stories that have been around in the media now for months and months, the reality, even if it's worse than I don't think this budget is going to make any difference to the trajectory of the UK economy. What I'm not saying is that the government's policy isn't harming the economy, but the harm that it is doing is minimal in the context of the more important drivers that will be driving accelerating growth in the economy.
And which sectors do you think are most likely to do well?
I would focus on...
Let's talk about what you actually expect to happen in 2 weeks' time. Your base case, some tax rises paired with some spending discipline. Which taxes do you think are most likely, and what do you rate as quite low probability?
Well, there's huge amounts of speculation, and there will be more speculation over the next few days and weeks. But my guess is that it won't be anywhere near as damaging as the consensus belief. So people like Robert Peston, for example, are talking, he believes that she's going to have to plug a 35 billion hole in fiscal arithmetic. I think that's nonsense. The Labour government's done for if it tries to do that. Politically, it will be so damaging. What I think she'll have to raise some tax, or she will want to raise some tax. There will also be some spending restraint, I believe. So my best guess is that the outcome will be something like 15 billion of tax increases. Now, there are, I think, about 100 different tax reliefs that cost the government about £200 billion a year. Now, there's plenty of scope for her to sort of look to those reliefs, non-indexation reliefs, for example, that would yield quite a lot of extra tax revenue. Some of that tax raising will come from those measures. Some will come from explicit tax increases, for example, on betting and gaming. And I would imagine there'll be lots and lots of measures introduced in the budget, lots of little things that will add bits and pieces here and there. But I think the overall picture is the 35 billion that some people are talking about is, I think, nonsense. I think it'll be something like 10 to 15. And I think that will be raised through a series of measures like the ones I've just talked about.
There's quite a lot of chatter about a basic rate rise for the first time in 50 years. And some of her phrasing in her speech made me think maybe that was what she was trying to suggest. We must all do our part. Do you think that's likely?
Not really, no. I just think it would be like delivering a bludgeon to your political opponents and saying, please come and smash me around the head with this bludgeon that I'm about to give to you. I mean, I just think it would be the most ridiculous own goal. I mean, the last time the basic rate of income tax went up was in 1975. Dennis Healey was the Chancellor. Weirdly, we had pretty much the same level of government spending to GDP, 46%. We had roughly the same level of tax as a percentage of GDP, about 40%. And, what happened, in Dennis Healey was not long for government as a result. Now, I'm not suggesting that there's going to be some sort of denouement to this government. They've got a massive majority, but it was over 50 years ago. I mean, I just think it would be so politically damaging for this administration, which is already struggling, politically. I just think they aren't about to sort of to open their wrists and lie in a warm bath. I just think that's not what they're about to do.
Of course, that tax increase 50 years ago led to an IMF bailout the following year. We've talked about IMF bailouts before. Surely it is something we should worry about if that is a step that the Chancellor takes.
No, it's not at all likely. No. We're a million miles away from that sort of scenario. I talked about the similarities, but there are many, many differences. I mean, not least, inflation was at 25%. Gilt yields were something like 20% or high teens anyway. I mean, it's just no. There's absolutely no reason to believe that we wouldn't be able to finance the deficit. Interestingly, I read today that Britain's largest asset management business, which is Legal & General, they have been adding to their UK gilt holdings because they think that they've got a more benign picture about inflation going forward, a more encouraging perspective on where gilt yields will end up, and they've been buying more gilts. I mean, that's the sort of narrative that I think blows a hole in this argument that there'll be some sort of buyer's strike and we'll have to go and borrow money from the IMF. It's just complete and utter nonsense.
And do you still expect momentum to build in the economy
Yes.
as rates start to
Yes.
fall.
This is the fundamental point, though. I know we've spent a long time talking about the budget, and of course, lots of people are sort of very focused on it, myopically focused on it. But the reality is, I don't think this budget is going to make any difference to the trajectory of the UK economy. None.
Well, let's bring this home. Let's make all this make sense for people who are investors in the UK. You're arguing that tax rises won't derail your growth view for this year, next year, and beyond.
What I'm not saying is that the government's policy isn't harming the economy, but the harm that it is doing is minimal in the context of the more important drivers that will be driving accelerating growth in the economy. So, I would argue there are things the government could do to help the economy. It's not going to do them. It's actually going to do things that at the margin won't be helpful. But they're not significant enough to derail the outlook for the UK economy. Why? Because these are the things that will drive growth in the economy. Lower interest rates, lower inflation, very, very important. We're already seeing the early signs of the impact of lower interest rates and lower inflation, or the expectation of lower inflation, certainly lower interest rates coming through in the housing market, for example. So mortgage lending growth is now above 3 a year. A year ago, it was below 1. Look at bank lending growth. Lending growth is now outstripping growth in deposits. First time in a very long time, since the pandemic. Consumer credit's growing at over 7%. There are early signs that the sort of thriftiness that UK households have been gripped by since the pandemic, and for good reason, you might even go all the way back to the financial crisis. UK economy has been grappling with a series of challenging economic events over the last 15 years. Financial crisis, Brexit, which was domestically challenging, that didn't help the UK economy. And then, of course, we had the pandemic, and then we had the war in Ukraine. Economically, we've had our fair share of crap, frankly, over the last 15 years. That's left all sorts of scars on UK households. What I now believe is that the UK households, having transformed their saving and indebtedness, UK bank deposits now significantly exceed loans. Household net debt is now positive cash of about 350 billion. About 15 years ago, it was minus. We were net indebted by about 350 billion odd. I mean, the transformation that's taken place over this period is just mind blowing. That's over 22% of GDP, by the way, today's GDP. So look, massive transformation in household finances, very elevated saving, lower interest rates, lower inflation, more confidence. I just think it's inevitable that UK households will be saving less, spending more, driving growth in the underlying economy. And that better growth will drive better productivity. I'm sure AI will have beneficial impacts on UK productivity too. I just think the future looks a lot brighter than a very, very crowded consensus believes.
And which sectors do you think are most likely to do well?
I think those that face the UK consumer. So you've got a combination, I think, of, first of all, very depressed valuations, unequivocally very low valuations in the UK, historically and in comparison with peers. But over and above that, what you've got is an underlying economy where growth will exceed expectations, but very much focused on areas of consumption. Consumption growth will be the driver of growth in the economy. That's where I think the positive surprises will be.
So which sectors would you focus most closely on?
I would focus on banks, house builders, retailers, leisure, all the sectors whose businesses and profits, earnings, revenues are driven by consumer spending.
And if the budget surprises to the downside on taxes, if it's worse than we think it's going to be, does that change your positioning on anything?
No,
Is there anything?
No. Let me give you a number that might put that into context. I think the tax raising measures in the budget will be something like between 10 and 15 billion. I'd be surprised if it was more than 15. You never know. She really could sort of score even more than one own goal. But A 1% only, a 1% fall in the savings ratio adds £20 billion of additional consumer spending to the economy. Just that alone. Just think about what lower interest rates will deliver. Just think about what growth in bank lending might deliver as consumers become slightly more confident about the future, are prepared to borrow more, save less, spend more, save less. Just these things will be cumulative. So, but just one thing, 1%, a 1% fall in the savings ratio from 10.5 roughly to 9.5, which would still be a very elevated level of spending, will add £20 billion of consumption to the UK economy. Important to bear that in mind.
Would you expect a sort of volatile couple of weeks either side of the budget, or do you think is everything largely expected?
Given how lurid some of the horror stories that have been around in the media now for months and months, the reality, even if it's worse than I think, won't be the shock that I think it could be if nobody had been saying it's terrible, there's a black hole, it's massive, etc., etc.
Okay, give me one sentence, the single most important misconception you want viewers to drop before budget day.
The consensus is wrong. It's just so wrong. It's not true. Maybe another might be, don't believe the mumbo jumbo about productivity. It's just nonsense. Watch the full podcast episode to hear what I think of Rachel Reeves's pre-budget speech. The link's in the description.